Have you noticed that daytime is for losers? Overnight's when the big money is made in the stock market. It's very easy. Anyone can do it. Just go to bed and get a good night's sleep. So, let's take a look. If you haven't noticed, there's a gap between daytime and overnight returns in the stock market. According to Bespoke Investment Group, the real profits for investors have come overnight when the market is closed for regular trading. Although Wall Street cannot entirely explain the cause, it's been shown that the gap between regular trading and night trading does exist. For you and me, the gap is simply the difference between stock returns during the hours the market is open and the returns after regular time daytime trading ends. How the gap is calculated is not as obvious though. The returns are fairly straightforward. They're based on prices at the start of trading in New York at 9:30 a.m. until the market close at 4 p.m. The overnight is basically the reverse. These price returns are from 4 p.m. close to the market opening at 9:30 a.m. the following day. The analysis from Bespoke focuses on the returns of the SPY or the spiders. It's an ETF that mirrors the Standard & Poor's 500 stock index. The SPY's price gain from inception through January of this year has been 541% cumulatively. This does not include dividends. But if you look more closely, it turns out that all of that price gain since 1993 has come outside regular trading hours. If you had bought the SPY at the end of each trading day since 1993 and sold at the market open the next day, capturing all of the after hours gains, your cumulative gain would be 571%. Let's say you did the reverse and bought the SPY in the morning at the open and sold just as the close of each day. In that case, you would be down 4.4% since 1993. So, if you're a trader, there's no need to stay up all night and work your portfolio because stock prices at the market open tend to be higher than the prices at the previous day's close. All you need to do is buy at the end of the day, go to bed, get a good sleep, and wake up in the morning and sell. Simply hold your shares while you sleep. There's no temptation to trade your stocks in a frenzy. Just get your rest. For those of us who are buy and hold investors, we win too. Some of the explanation for this phenomenon is that relatively few people actually trade after the market closes. Orders tend to build up overnight, and in a rising market, that will produce an upward price surge when the market opens. Another explanation is human tendency. Investors tend to panic at bad news, and the panic tends to happen during the day. So, one advantage of not trading during the day is you won't likely participate in panic selling. A big lesson should be to forget about the news and the market ups and downs during the day. The drama is literally not worth your time and energy. It clearly pays better to sit on your hands. Don't fall for the illusion of control with buying and selling within the day. Buying and holding the overall market is a better way to go. Slow and steady investing is generally more profitable. Frequent trading is generally not. So for today, that's ChewDog Charts, and get a good night's sleep.